Cathy Sedacca of Sage Business Credit. We'll be talking about accounts receivable and inventory financing. And I also have known Cathy for a number of years and interacted on a number of fronts. And she's actually a holdover from a year and a half ago or whenever we did this last time. So welcome back, Cathy, and tell everybody about accounts receivable and inventory financing.
Thanks. So I'll start by giving you a couple of typical scenarios. Number one, you've got a contract manufacturer who's got 3 years of business under their belt. They have a bank line of credit but are growing fast and need an increase to their line of credit. The bank, having already financed the purchase of equipment and provided a line of credit, says they can't do anything more at this time. And oh, by the way, the line they have needs to pay down to zero. Number two, a company with a great new food product who's been selling to Lunds and Byerly's for 5 years, bootstrapping it the whole way. Now Costco and Target want to place sizable orders on net 60-day terms, but the already stretched co-packer requires payment in 30 days. 3 banks have already said the same thing. Come back in 2 to 3 years when the company's showing consistent sales and profitability. These are just 2 examples of the types of problems new companies have with growth and funding. The good news is asset-based lenders can help. Where banks tend to look in the rearview mirror and at historical performance when making their lending decisions, asset-based lenders look at the future. They look at your sales. Our underwriting process involves understanding the sales process. What product or service are you selling, and who are you selling it to? The bottom line is, did you deliver what your customer asked for, and are they willing and able to pay for it? With advance rates ranging anywhere from 70 to 90% of accounts receivable and up to 60% of inventory when paired with an accounts receivable loan, asset-based lending facilities allow you to get the most cash out of your business. And did I mention that ABL loans are scalable? They'll grow with your business without the hassle of having to circle back around to a credit committee. Getting started is easy. Complete an application, provide some financial information, agings, inventory reports. After a signed proposal, funding can happen in as little as 5 to 10 business days. Keep in mind that an inventory loan will typically require an on-site collateral exam and potentially an appraisal, which may delay funding by 2 to 3 weeks. Asset-based lending is perfect for manufacturing, distribution, business services, and transportation industries. Typically, people come to us with little or no operating history, a history of losses. They're often highly leveraged, and it's not uncommon that the owners have a credit score that has taken a beating. The cost is somewhat more than traditional bank financing, but significantly less than online loans, and it doesn't require giving up equity. I'm happy to talk specifics with anyone who'd like to hear more.
Great, thank you very much.